All right, so let's unpack this whole crypto.com thing. You sent over some articles about their legal moves and that meeting with President-elect Trump. What is the mission for this deep dive? Like, what are we looking to figure out here?
Well, I think we need to try to figure out what this means for crypto.com's future, especially here in the U.S.
Yeah, especially in the U.S. Okay.
Absolutely. It's a fascinating story with a lot of moving parts. We've got the SEC breathing down crypto.com's neck with a Wells notice, hinting at potential violations. Then boom, crypto.com fires back, suing the agency for overreach.
Wow, that's a bold move for a company that's trying to really gain a foothold here in the American market.
Yeah.
You don't usually see companies, especially in sectors like sensitive as crypto, picking fights with regulators.
Exactly. Which is why their next move is even more intriguing, just days after filing that lawsuit. Crypto.com CEO Kris Marszalek is hobnobbing with Trump at Mar-a-Lago. They reportedly discussed Trump's vision for crypto, including that whole idea of a national Bitcoin reserve.
Okay, now that's where it gets really interesting. Trump has been pretty vocal about his positive view of crypto. He even launched his own digital asset project, World Liberty Financial.
Though the details on that are still a bit murky.
Right, and then there are the appointments. Paul Atkins, a known crypto advocate, is rumored to be Trump's pick for SEC chair. And David Sachs, former PayPal COO, is supposedly being tapped as the AI and crypto czar, essentially a high-level advisor on all things tech.
Crypto.com goes from suing the SEC to having a friendly chat with the incoming president, who seems pretty pro-crypto. What does this sudden shift tell us about their strategy?
Well, it suggests they're betting big on a more crypto-friendly regulatory landscape under a Trump administration. Remember, Crypto.com has been making some power moves lately, signaling their ambition to become a major player in the U.S.
Right.
They even snagged the naming rights to the former Staples Center. Now, Crypto.com Arena, right, that was a massive deal, a 20-year contract. You don't just drop that kind of cash unless you're really serious about establishing a long-term presence. And let's be real, the owners of that arena wouldn't have agreed to such a massive deal if they weren't confident in Crypto.com's future prospects.
Precisely. And now, by dropping their lawsuit against the SEC on the same day as the Mar-a-Lago meeting, they're sending a clear message. They're ready to play ball with the incoming administration. Their official statement even says they want to work with the new government on crypto regulations.
So are they basically saying, hey, SEC, we'll play nice now that our guy's in charge?
It's certainly a possibility. But it's also possible they genuinely believe that working with the Trump administration is the best way to achieve their long-term goals, for both themselves and the industry as a whole.
Okay, so they're making a big bet on Trump and a more favorable regulatory environment. But is that a smart move? Is it bullish for Crypto.com? Particularly in America. Could they even become the next Binance? The 800-pound gorilla of the crypto world?
That's the million-dollar question. If they can successfully navigate this new landscape and leverage their relationships with key policymakers, they could certainly position themselves for significant growth in the U.S. market.
But it's still a gamble.
Yeah.
Right? There's no guarantee that things will go their way, even with a more crypto-friendly administration in place. Plus, Binance is a formidable competitor with a huge global footprint.
Absolutely. There are a lot of unknowns, and it's still early days. But what we're seeing here is a major shift in the dynamics of the crypto industry. Crypto is becoming increasingly intertwined with the traditional financial system and the political establishment.
And Crypto.com is right at the center of that shift, making bold moves, trying to shape the future in a way that benefits them.
Exactly. And the outcome of their gamble could have significant ripple effects throughout the entire crypto ecosystem. So let's dive deeper into the potential implications of this whole saga, both for Crypto.com and for the wider crypto world. So you're looking for the potential impact of this gamble. What could it mean for Crypto.com and for crypto in general?
Right. Is this a turning point for the industry? Are we heading toward a more regulated, maybe even more centralized crypto world, especially here in the U.S.?
That's a possibility, and one that's stirring up a lot of debate. Some folks welcome the idea of increased regulation. They argue it could bring stability and legitimacy, making traditional investors more comfortable with crypto. Think about it, if the U.S. government is backing it, maybe it doesn't seem so Wild West anymore.
Yeah, I get that. But others worry that too much government involvement could stifle innovation and undermine the whole decentralized ethos that crypto was built on. Is that a valid concern?
Absolutely. It's a delicate balance.
Yeah.
Regulation could make crypto more accessible to the masses, like what happened with the early internet. But it could also lead to a scenario where a handful of powerful players control the game. That's something to watch closely.
And speaking of powerful players, How does all this play into Crypto.com's ambition to become the next Binance? Do they have a shot? Especially if they're cozying up to the new administration.
It's a bold strategy, that's for sure. Remember, Binance has had its own run-ins with regulators, particularly in the U.S. They even had to operate under a separate entity, Binance.US, because of those restrictions.
Right. So could Crypto.com's approach, working with the government instead of fighting against it, give them an edge? Could they use this new regulatory landscape to their advantage and leapfrog Binance in the American market?
It's certainly a possibility. If they play their cards right, they could establish themselves as the go-to exchange for institutional investors and everyday users who are looking for a safe, regulated platform. That's a powerful position to be in.
But Binance is no slouch. They're the world's largest exchange for a reason. They've got a massive global footprint and a loyal user base.
True. But don't underestimate Crypto.com's ambition. They're clearly willing to invest heavily in their growth, as evidenced by that 20-year, multi-million-dollar deal for the Crypto.com arena. That wasn't just a marketing stunt, it was a statement of intent.
Yeah, they're not messing around. It seems like they're really going all in on this vision of becoming a dominant force in the crypto world.
And they're not alone. The whole industry is evolving at a breakneck pace. We've seen explosions of innovation, like decentralized finance, DeFi, and non-fungible tokens, NFTs. We've also seen spectacular implosions, like the FTX collapse last year.
Man, that was a wild ride. It was like watching a house of cards crumble overnight.
Exactly. And it highlighted the inherent risks in this space. Crypto is still a very volatile and frankly unpredictable asset class.
But it also underscored the need for greater transparency and accountability, which is where regulation could play a role. Done right, it could help protect investors and prevent future meltdowns.
That's the hope, at least. But it's important to remember that crypto was born out of a desire for financial freedom and independence from centralized control. Too much regulation could stifle that spirit of innovation.
So it's a tightrope walk, isn't it? Finding that balance between fostering growth and protecting consumers.
Absolutely. And it's going to be fascinating to watch how it all plays out. The stakes are high, and the players are making bold moves. Crypto.com's gamble on Trump is just one piece of a much larger puzzle.
A puzzle that's constantly changing shape, I might add. I mean, look at the broader economic context. Rising inflation, fears of recession, a war in Europe. How does all that factor into Crypto.com's ambitions?
That's a crucial question. Crypto has been touted as a hedge against inflation. But we've seen that correlation break down recently. Crypto prices have been taking a beating, just like the stock market, as investors flee to safer havens.
So if we head into a prolonged recession, could that derail Crypto.com's plans? People tend to tighten their belts during economic downturns, and that includes cutting back on risky investments.
It's a legitimate concern, but some argue that a recession could actually drive people towards crypto as they lose faith in traditional financial systems and look for alternatives.
So a double-edged sword, basically. The macroeconomic environment could help or hinder Crypto.com, depending on how things unfold.
Exactly. And it's not just the U.S. economy that matters. Crypto is a global phenomenon, and global economic headwinds could also impact their prospects.
This is getting complex. It's like trying to predict the weather months in advance. There are so many variables at play.
That's the nature of the beast. We're living in a time of immense uncertainty and volatility, both economically and politically. Trying to predict the future of crypto is like trying to catch lightning in a bottle.
But hey, that's what makes it so exciting, right?
It certainly keeps things interesting. And it's a reminder that nothing is guaranteed in this space. Crypto.com might become the next Binance. Or they might stumble and fade into obscurity.
Or maybe, just maybe, they'll chart a completely different course and redefine the entire industry in the process.
Now that would be truly game-changing, and it wouldn't be the first time crypto has surprised us.
Okay, so we've covered a lot of ground here. Crypto.com's gamble on the Trump administration, the potential for a regulatory shakeup, and the broader economic forces swirling around all of this. But let's bring it back to you. What are your biggest takeaways from all of this? Is this whole Crypto.com saga making you bullish or bearish on their future, especially here in the U.S.?
It's certainly given us a lot to think about. On the one hand, you have Crypto.com making these audacious moves, dropping serious cash on that arena deal, then going toe-to-toe with the SEC. It almost paints them as this rebellious force taking on the establishment.
Right, like they're not afraid to ruffle some feathers and shake things up.
But then they pivot and suddenly they're cozying up to the incoming president, a figure who let's face it, is incredibly polarizing.
Yeah.
And that adds a whole new layer of complexity to this situation.
Yeah, it's almost like they're playing a high-stakes game of 4D chess. They're making calculated risks, forming alliances, and trying to anticipate how the board will look several moves down the line.
And that's what makes this so fascinating. We're not just talking about a company trying to maximize profits. We're talking about a company that's trying to shape the future of an entire industry.
An industry that's already disrupting traditional finance and challenging long-held assumptions about how money works.
Exactly. And Crypto.com is positioning themselves to be a major player in that revolution, for better or for worse. Their success or failure could have ripple effects that extend far beyond their own balance sheet.
So if we had to boil it down to one key question, it's this. Is Crypto.com's gamble on Trump going to pay off? Will it propel them to the top of the crypto heap, or will it backfire spectacularly?
That's the million-dollar question, and unfortunately, there's no easy answer. There are so many factors at play: the regulatory landscape, the competitive dynamics, the broader economic climate, and even the political winds, which can shift on a dime.
So what should we be watching for as this story unfolds? What are the key indicators that Crypto.com is on the right track, or that their strategy is starting to unravel?
One thing to watch is how the SEC responds to this whole situation. Will they soften their stance under a new, more crypto-friendly chairman, or will they double down and try to make an example of Crypto.com?
And what about the other players in the crypto space? How will Binance react to Crypto.com's aggressive moves? Will we see an escalation in the competition, or will they find ways to coexist?
And don't forget about the users. Will they flock to Crypto.com if they become the go-to regulated exchange in the US? Or will they be wary of a platform that's too closely aligned with the government?
So many questions, so few answers. It's enough to make your head spin.
But that's the beauty of it, isn't it? We're witnessing history in the making. The crypto revolution is still in its early stages, and the outcome is far from certain.
It's like we're standing on the edge of a vast, uncharted territory. We can glimpse the possibilities, new forms of money, decentralized power structures, a more equitable financial system, but the path ahead is shrouded in mist.
And Crypto.com is one of the pioneers venturing into that unknown. They're taking risks, making bold bets, and charting a course for others to follow.
Whether they succeed or fail their journey will be fascinating to watch, and it'll tell us a lot about the future of crypto, the role of regulation, and the evolving relationship between technology and society.
So buckle up and get ready for the ride. The crypto revolution is just getting started, and it's going to be a wild one.
And that wraps up our deep dive into Crypto.com's wild ride. Be sure to check back for our next episode, where we'll be tackling another fascinating topic in the world of crypto. Until then, stay informed, stay curious, and as always, happy investing.